This is PSN Newsrun, streaming exclusively on YouTube.
Hello and welcome to PSN Newsrun. Our top stories. President Tinubu pushes overhaul of global mineral finance, calls for Africa-led control. PENGASSAN, NUPENG reject government's push to divest JV assets. And on business, FCCPC wants harassing loan apps to stop harassing customers over debt. And now, details. Africa's mineral wealth took center stage in New York as President Bola Tinubu, represented by Vice President Kashim Shettima, led a strong call for a reset of the global financial system governing the continent's resources. Joycelyn is reporting from the State House.
President Bola Tinubu is demanding a reset of the global financial order that governs Africa's mineral resources, insisting the continent must find its own sectors, control supply chains, and safeguard sovereignty. Speaking through Vice President Kashim Shettima at the Africa Mineral Strategy Group Roundtable in New York, Tinubu warned that without ownership and control, Africa risks losing the benefits of its own resources.
First, we must take the bull by the horns in financing our future. Never again shall we wait for capital to trickle in. With sovereign funds, blended vehicles, and innovation tools like the Africa Mineral Token, Africa shall finance Africa. To safeguard this sovereignty, we must get our cobalt, lithium, graphite, gold, and rare earth, not as fragmented states but as one continental bloc, wielding collective power in global supply chains.
He outlined three priorities: end the cycle of exporting raw rocks and importing finished goods by building industries at home, adopt new frameworks to give Africa ownership and standardization of geological data, and accelerate exploration and mapping to unlock resources.
The promise of this roundtable must go beyond the glamour of New York City. Today, let us speak with one voice, act with one strategy, and commit with one resolve to reimagine Africa not as a warehouse of raw materials, but as a workshop of value creation. None of us can achieve this in isolation. As chair of this roundtable, I pledge, on behalf of President Bola Ahmed Tinubu, Nigeria's unflinching commitment to ensuring that AMSG fulfills its promise of catalyzing a mineral-led renaissance. Let us rise from this dialogue with a communique of clarity, a framework of action, and a spirit of unity.
Tinubu also urged leaders to finance Africa's future, saying Africa must fund Africa through sovereign wealth funds, blended vehicles, and tools like the Africa Mineral Token. He called for collective leadership with sovereign funds, private partners, and development allies to rewrite the continent's mineral story. Concluding, President Tinubu pledged Nigeria's full commitment to the Africa Mineral Strategy Group, urging leaders to live with clarity, a framework for action, and a united drive for a mineral-led renaissance. The UN Assistant Secretary General and UNDP Africa Regional Director, Ahuna Eziekunwa, urged leaders to ensure Africa's resources serve the people, not exploitation. She stressed partnerships that deliver technology, transfer, beneficiation, and jobs. According to her, with global interest in Africa's minerals, the continent must shape and control the terms of engagement.
There is a second scramble for Africa, and it is in the zone of Africa's minerals. But it's no longer about, it's not the colonial era scramble, which was about taking territory. It is happening through economic diplomacy, commercial diplomacy as they call it, through military influence, and this is dangerous, even more dangerous than occupation. But it's also happening in the non-state world. We have violent extremism that is powered by these minerals, in some cases in ungoverned spaces, where rebels and extremist groups have taken over. And there's a market for it, even though it's so illegitimately obtained. Why? I think these are geopolitical questions. We have a battle in the geopolitical arena right now for Africa.
Also speaking, European Union Commissioner for International Partnerships, Joseph Skeller, highlighted Europe's efforts to secure critical raw materials. He noted that the EU adopted the Critical Raw Materials Act in 2024 to boost domestic production and diversify supply. Under this act and the Global Gateway Strategy, the EU has signed 14 strategic partnerships across the raw materials value chain, 4 of them in Africa.
For instance, we are investing in developing the Lobito Economic Corridor, linking the port of Lobito in Angola to the copper belt in DRC and Zambia with over 1,800 kilometers of the railway. By linking mines, industrial centers and export hubs, it has the potential to become a major economic artery in Southern Africa and to create a true regional value chain for CRM. We are also cooperating at regional level with projects such as PanAfGeo, supporting geological surveys in Africa and promoting the EU-Africa partnership in geosciences.
Reporting for PS News, Joycelyn Ella Keche Ada.
In a related development, Vice President Kashim Shettima is wooing investors and strengthening ties, highlighting Nigeria's reforms and meeting Austrian Chancellor Christian Stocker at the UN General Assembly. Joycelyn is on standby.
Vice President Kashim Shettima hosted a roundtable organized by the Business Council for International Understanding in partnership with Flour Mills of Nigeria and other conglomerates. He used the platform to highlight Nigeria's investment opportunities and President Tinubu's ongoing economic reforms. Addressing investors, Shettima said President Tinubu is a trusted ally who understands both the American ecosystem and the language of business. He insisted the Nigerian economy has turned the corner under Tinubu's reforms, pointing to positive figures, stability, and an improved ease of doing business. He urged investors to seize the moment, stressing there has never been a better time to invest in Nigeria.
For last quarter, the economy grew by 4.3%. We are expecting that in the next 2 years we'll hit 7%. We have no option than to grow. And now our foreign reserves has hit $42 billion. It's still little for a nation of Nigerians. But it's still better than why we made it. There's a lot of agitation within the nation because of the fallouts of our economic policy. But it's a maturation process. It's a price that we all have to pay for the nation to be stabilized. So I can assure you that in President Tinubu, you have a partner that you can trust.
On the sidelines of the UN General Assembly, Shettima also held bilateral meeting with Austrian Chancellor Christian Stocker. Both leaders agreed to forge new ties and explore fresh avenues to deepen cooperation between Nigeria and Austria. Reporting for PS News, Joycelyn Ella Keche Ada.
University non-teaching staff have extended their warning to the government and say a strike is closer than ever. Ella filed in this report.
The Senior Staff Association of Nigerian Universities and the Non-Academic Staff Union have extended their ultimatum to the federal government by 2 weeks, citing unmet demands over salaries and allowances. The unions, under the Joint Action Committee, had earlier issued a 7-day notice demanding payment of withheld salaries and allowances and implementation of welfare agreements. They say government silence forced the extension. Union leaders warn that if their concerns remain unaddressed, they will embark on what they describe as a total and indefinite strike, one that could shut down administrative and support services across universities. They also accuse the government of sidelining their issues while giving more attention to other academic unions. A prolonged shutdown would stall university operations, delay graduations, and deepen the crisis in Nigeria's higher education sector. With the clock ticking on the extended ultimatum, the government faces fresh pressure to avert another nationwide disruption in universities. Ella Okechukwu, PS News.
Major oil unions are drawing a line in the sand, rejecting what they say are dangerous plans by the government to sell off stakes in key oil and gas assets. Joycelyn talks energy.
The Petroleum and Natural Gas Senior Staff Association of Nigeria and the Nigerian Union of Petroleum and Natural Gas Workers have rejected the federal government's plan to sell stakes in joint venture oil assets managed by the NNPCL. Government currently holds about 55 to 60% of all the assets and is proposing to cut that to as low as 30% to raise quick revenue. The plan also includes amending the Petroleum Industry Act, a move the unions say would shift control of NNPCL away from the Petroleum Ministry. Union leaders Festus Osifo and Williams Akporeha warn that the plan could mortgage Nigeria's future, reduce revenues, weaken foreign exchange earnings, and threaten jobs. They describe the PIA amendment as a backdoor move that could harm governance and investors' confidence. Instead, the unions want government to focus on boosting crude output and attracting investment rather than what they call selling off irreplaceable national wealth. Reporting for PS News, Joycelyn Ella Keche Ada.
Air Peace has finally launched flights to London, but its chairman says it took 7 years of regulatory roadblocks to get there. Here's Daniel with details.
Chairman of Air Peace Ali Nonyema has revealed that the airline was blocked from flying into London for 7 years due to what he calls regulatory and political obstacles. Air Peace secured designation for the Lagos-London route over 6 years ago and even acquired Boeing 777 aircraft in readiness. But Onyema says efforts were frustrated when Nigerian aviation authorities failed to confirm the airline status to European regulators, stalling approval for the required technical permit. The airline eventually overcame what Onyema described as sabotage from both within Nigeria and abroad. After rigorous international audits, Air Peace finally launched its London service in March 2024. The delay, according to Onyema, denied Nigerians affordable travel options and let foreign airlines dominating the route. He insists the breakthrough is not just for Air Peace, but for Nigeria's quest to compete globally in aviation. With London flights now operational, Onyema says the lesson is clear. Nigerian airlines need stronger support to break through barriers on international routes. Reporting for PS News, Daniel Okejeme.
And now on business, the Central Bank of Nigeria has cut interest rates and the private sector is pushing hard for meaningful credit relief. Let's hear Ella on this business report.
The CBN's Monetary Policy Committee has reduced the benchmark rate by 50 basis points to 27%, triggering calls from operators for immediate relief in credit costs and access. This is Nigeria's first interest rate cut since 2020, a move driven by 5 months of falling inflation and a desire to stimulate growth. Alongside the rate cut, the CBN adjusted related measures. The cash reserve ratio, CRR, for commercial banks was reduced from 50% to 45%, and the standing facilities corridor was narrowed to plus 250 over minus 250 basis points. The Nigeria Employers Consultative Association, NECA, applauded the rate cut but warned unless it translates into cheaper loans, businesses and households won't feel relief. NECA urged the CBN and commercial banks to ensure that lower policy rates actually lead to declines in lending rates, especially for small and medium enterprises. Some analysts caution the effect may be slow, because banks are not obligated to reduce their lending rates in perfect sync with the CBN. If credit costs fall meaningfully, businesses might expand, hire more, and stimulate the real sector. But if lending rates stay stubbornly high, this relief may be more symbolic than substantive. The strength of the transmission mechanism is now under the spotlight. With the CBN now easing monetary policies, the next critical test will be whether commercial banks and regulators convert this into real affordable credit or leave the rate cuts stranded in theory. Ella Okechukwu, PS News.
Nigeria's consumer watchdog is warning loan apps and businesses: stop harassing customers over debt or face the law. Here are the details. The Federal Competition and Consumer Protection Commission has urged Nigerians to report loan apps and businesses that threaten or intimidate them over unpaid loans, declaring that no consumer should live in fear, as seen borrowers publicly shamed, their data exposed, and families harassed. The FCCPC says such practices are illegal under its new digital lending regulations. The Commission has opened dedicated channels for complaints on its website and via email. Loan companies that engage in threats, defamation, or data abuse now risk fines, suspension, or outright ban. The FCCPC insists lending innovation is welcome, but not at the expense of consumer dignity. The move is expected to curb predatory practices, protect vulnerable borrowers, and restore trust in Nigeria's growing digital lending sector. For the FCCPC, the message is clear: Nigerians must have access to credit without fear of harassment. Reporting for PS News, Oluwatosin Deba. And this is where we draw the curtain on today's news run. Thanks for watching. I am Oluwatosin Deba. Good evening.
You just watched PSN Newsrun, streaming exclusively on YouTube. This is your trusted voice for news that matters. Subscribe, like, share, and stay informed.